Hey guys, this is Rudy for Bester Investor, Mr. Oxy, coming at you live from Palm Beach, Florida today. I'm not going to talk about Occidental. In fact, I'm not even going to mention the fact that Occidental went up about 6% today because it's rather meaningless in the greater scheme of things. I know many of you have a position in the 20s, some even in the 30s, so I'm not going to express any joy at the fact that Oxy at least had a little positive bump today and went up about 6% or so. So I'm not going to talk about Oxy at all, so I won't mention Oxy once for this entire video. So I'm finished talking about Oxy. In fact, what I do want to talk to you today about is a few dividend stocks that you might think of owning. I'm long on all three of these, 3M, Enbridge, and TD Bank. TD is an acronym for Toronto Dominion, which is a Canadian bank. Enbridge is a Canadian energy conglomerate. So these companies actually also, in addition to a nice juicy dividend, provide you with a little bit of diversification across borderlines because you're trading or investing in a Canadian equity as well as a US one. So let's take a look quickly here and see what's going on with these three equities. So the first thing I thought to do is just sort of take a look at the graph in terms of where these stocks are trading year to date. So starting in January, we saw all of them kind of follow one another down during the March crash as a result of the pandemic. Right at the top here in small little numbers, you can see 3M went down about 33%, Toronto Dominion, so TD Bank almost 40%, and Enbridge about 40% as an oil and gas company. And you can see they kind of have been following each other sort of along the same pattern and lines. The laggard at the bottom here is Enbridge, which is still down about 25% year to date, which is actually not too bad considering the fact that Enbridge is an energy stock. So a quick sort of highlights reel in terms of these companies because you may not be familiar with them. So the first one we're going to look at is Enbridge. I mentioned it's a Canadian company. In addition to the fact that Enbridge is very diversified in terms of oil and gas, midstream, pipelines, etc. Enbridge is also the retail distribution account for most Canadians. In fact, more than a third of Canadian people live in the province of Ontario, and they write a nice big fat juicy check to Enbridge for heating and cooling their homes. So Enbridge has a recurring revenue stream that is very, very attractive as a means to generating free cash flow, which is my next point right here. The free cash flow for Enbridge is almost entirely fee-based or regulated. Canada has one of the most heavily regulated industries in what we commonly know as sort of a capitalistic market. It's probably arguably as socialist as what it is capitalist. The government interferes in everything from oil and gas to banking to healthcare to whatever. If you can think of it, the government has a hand in the pie. Enbridge delivered strong results in Q2, 90 cents in distributable cash flows, DCF per share. It's expected to earn approximately $3.36 to $3.59 in distributable cash flow per share for the year, this current year that we are in, close to the $3.36 it earned last year. So not too much of a change considering that we just went through a massive pandemic and crash. Even at the low end, Enbridge's DCF would be significantly higher than its annual dividend of $2.48. So it can comfortably pay the dividend out of its free cash flow. It's also predictable, and Enbridge has been increasing its dividend for the last 25 years at an 11% compounded growth rate, and it's currently yielding approximately 8%. So that might give you a little hint as to why I like Enbridge and why I am long in Enbridge. I am also long in 3M. So this position for me currently is underwater. I'm not too concerned about it. In fact, 3M is arguably quite cheap. It pays a reasonable, or I should say a reasonably juicy dividend of 3.7%. That's what it's yielding currently. It's been holding up well in terms of the global pandemic and the recession. In fact, its sales were down only 12% year over year in Q2, but it remains solidly profitable. And over here, you can see there's a little note that I snuck in here that says even its worst performing division, healthcare, had a 16.8% operating margin. So the worst performing division still came in at almost 17% operating margin. And 3M, much like Enbridge that I just talked about on the previous slide, has been boosting its dividend annually for more than 6 decades. It is definitely a dividend aristocrat. It has a $90 billion market cap and its debt to equity ratio is only 0.25 times. Strong company. How about TD? TD is underperforming the S&P. Its price is down 20% year to date, pretty much in line with most of the banking stocks. And many of you probably own some banking stocks, and you're probably underwater if you're long any of the banking stocks. Once again, you have a Canadian stock, so you have a little bit of diversification there in terms of currency and in terms of cross-border investment. Strong results in Q2. The last time they reported was on May the 28th, and they showed a sharp increase in provision for credit losses, which rose. The provision for credit losses rose from around $460 million a year ago to more than $2 billion. So that's like a fourfold increase in provision for credit losses. But despite the above, TD still reported a net income of 1.5 billion Canadian dollars, which is about half of what it recorded in fiscal year 2019. So strong results despite the massive increase in provision for credit losses as a result of the pandemic. A very decent profit margin of 14%. And a very juicy dividend of 5%. Its PE is currently around 10, and its price-to-book ratio is only 1.2. Some key statistics, very briefly. I'm not going to keep you guys too long here, but I do want to show you sort of some of the interesting factoids about these three companies. So you can see on this line over here, the market cap respectively for 3M 92 or 90 billion, Enbridge about 60, and TD about 85. So not too significantly different, and Enbridge certainly significantly smaller than the other two. However, when you look at the annual sales for these companies, 3M 32 billion, Enbridge 37 billion, and TD 44 billion. So Enbridge, despite the fact that it is the smallest of the three, is actually sort of there or thereabout in terms of sales. In fact, it's in the mid-range between these two. But how about the annual net income? 3M 4.5 billion and Enbridge 4.3 billion, almost the same. How about the quarterly sales? 3M 7 billion, Enbridge almost 6 billion, TD 9 billion. Pretty good, strong companies, all of them. The dividend we talked about briefly, so let's go into just a little bit more detail here in terms of where they are at. I'm not going to linger too long on this slide over here. Here we can see the actual prices of the stock and where it's closed currently. So the stock price for 3M at around 160, for Enbridge at around $30, and for TD Bank at around $47. Of course, 3M is a conglomerate, Enbridge Oil, and TD is a bank. So diversification in addition to the cross-border diversification and currency diversification, assuming you'd be interested. So let's look at that dividend. So currently, the most recent earnings we had, $1.78, 56 cents, $1.25, and then the most recent dividend, $1.47, 61 cents, not bad for a $28 stock, and 58 cents, not bad for a $47 stock. And then the price earnings on a trailing 12-month basis, 18, 15, and 11. Nice numbers all round. So there you go. There's three of my favorite longs. What I'd like to know is what are some of the equities you like, and perhaps some of the ones that you're long in. Share with me in the comments. Tell us why you like those particular stocks. So these are three of mine. TD is actually one of my biggest long positions. It's certainly, it may be the largest long I have, or it could be maybe in second spot. I'd have to check. Anyway, if you like the videos, please subscribe. I would appreciate that. I do appreciate your comments on the last video that I made related to Oxy from last Friday. We had over 100 comments, so thank you for that. I look forward to sharing some information with you again, and as you can see, I try to respond to as many comments as possible. I am bullish on all three of these stocks, 3M, Enbridge, and TD. I own all three of them. Remember not to consider my educational videos as financial advice, because you're probably just going to lose all your money. And I did promise at the beginning of the presentation that I will not be mentioning Occidental Petroleum in this in this presentation, so I won't talk about Oxy, and I'll just leave you with 3M, Enbridge, and TD as three of my favorite longs. Favorite in quotation marks, because we shouldn't have favorites. We should always keep a level head when we are investing our money. On that note, stay safe, keep well. This is Rudy for Best Your Investor signing off, and I'll see you guys again soon with a new video. Thanks for watching. Bye-bye.